versus S&P 500. The green trade that nobody saw coming. It is December 2025, and if you believe the headlines from the last 3 years, we shouldn't even be working anymore. By now, artificial intelligence was supposed to be doing our jobs, driving our cars, and most importantly, managing our money better than Warren Buffett. The promise was simple. Give an algorithm millions of data points, let it sleep 0 hours a day, and watch it crush the stock market. No emotions, no panic selling, just pure calculated profit. But now that the 2025 numbers are finally in, we have a problem. Everyone has been downloading apps that promise AI-picked stocks. But while you were chasing algorithms, the boring old S&P 500 has been on a historic run. So the burning question is, did the machines actually win, or did they just burn a hole in your wallet with subscription fees? In this video, we are auditing the top AI investment platforms of 2025. We're going to look at the godfather of AI ETFs. We'll test the new green fintech algorithms, claiming they can save the planet and your portfolio. And I'm going to show you the one specific sector that AI predicted would boom, that human traders completely missed. Buckle up. Let's run the numbers. First, we need to set the stage. You can't beat the market if you don't know what the market did. And 2025 has been weird. Wall Street targets for the S&P 500 were shattered. We saw the index push past historic highs, driven largely by two things: the continued explosion of tech and a surprise comeback from the energy sector. Here is the irony. The AI boom required so much electricity that it turned boring utility stocks into high-growth superstars. Companies that own power grids and nuclear reactors saw gains we usually only see in Silicon Valley. So for an AI to beat the market this year, it didn't just need to buy NVIDIA, it needed to be smart enough to buy the power company that keeps NVIDIA's lights on. The S&P 500 returned massive gains simply by holding the biggest winners. It didn't try to get cute, it didn't try to time the dip, it just rode the wave. This sets a very high bar for our robots, because if you paid a monthly subscription for an AI trading bot and it didn't beat the index, then you effectively paid money to lose money. So, did the algorithms figure it out? Let's look at our first contender. For years, the gold standard for this experiment was the AIEQ, the AI-powered equity ETF. It runs on IBM Watson. It analyzes millions of news articles, social media posts, and earnings reports every single day. It works 24/7. And in 2025, well, it struggled. Here is the dirty secret about AI stock pickers that nobody tells you. They overthink it. While the S&P 500 simply held onto the winners, many older AI models tried to time the tops and bottoms. They sold winning stocks too early to lock in profits, missing out on the massive rallies we saw in late 2025. This is called overtrading, and it is the silent killer of returns. When an AI looks at social media sentiment, it can get spooked easily. A little bit of bad news on Twitter might convince the algorithm to sell a perfectly good stock. Meanwhile, the dumb index fund just holds on, and eventually the stock goes back up. Plus, there are the fees. An S&P 500 index fund costs you practically nothing. These managed AI funds charge significantly more, sometimes nearly 1%. That means the robot doesn't just have to tie the market, it has to beat it by a hefty margin just to break even. So if you just bought the passive AI ETF and walked away, you likely lost to the market. The set it and forget it robot isn't quite there yet. But that's old AI. What about the new tools that put the power in your hands? This year we saw a massive shift from black box AI, where the computer just does whatever it wants, to explainable AI. Platforms like Danilfin and Trade Ideas exploded in popularity in 2025. Instead of trading for you, they give stocks an AI score based on probabilities. And this is where things get interesting. These platforms started flashing strong buy signals on sectors that humans were ignoring. This brings us to the biggest surprise of 2025, green fintech. For a long time, sustainable investing, or ESG, meant sacrificing profit for principles. You bought green companies and you accepted lower returns. But the 2025 AI algorithms flipped this script. New carbon-aware algorithms didn't just look for nice companies, they looked for efficiency. They realized that companies lowering their energy costs were more profitable. The AI noticed a pattern that humans missed. Tech companies that secured their own green energy sources were outperforming those that relied on the unstable public grid. So the algorithms started aggressively buying companies involved in nuclear energy, efficient cooling systems, and sustainable data centers. They didn't do it to save the polar bears. They did it because the math said these companies were undervalued. And they were right. The green fintech sector specifically the intersection of AI hardware and clean energy, was the highest performing sector of the year. If you followed the green algorithms in 2025, you didn't just beat the market, you crushed it. Let's look at a specific example to show you how this actually worked. In early 2025, human traders were dumping utility stocks because interest rates were still high. Humans thought, utilities are boring, I want tech. But the AI algorithms were looking at alternative data. They were scraping regulatory filings and energy consumption reports. The AI saw that data centers were signing massive 20-year contracts with nuclear power providers. The algorithm recognized a revenue guarantee that human traders were ignoring. So while the humans were selling, the green fintech bots were buying. By the third quarter of 2025, when those contracts were made public, the stock prices doubled. The AI got in early because it didn't care about the narrative. It only cared about the data. This is the key difference. Humans trade on stories. AI trades on probability. And in 2025, probability won. So let's answer the title of this video. Can AI actually beat the S&P 500? The answer is yes, but only if you use it correctly. If you are looking for a magic robot to take your $1,000 and turn it into $1 million while you sleep, no. That technology doesn't exist for retail traders yet. The fees and the overtrading will kill your gains. However, the hybrid model is winning. The best performing portfolios this year weren't 100% AI. They were 90% S&P 500 and 10% AI-assisted bets. The AI finds the opportunities that are too complex for the human brain to see, like the correlation between carbon efficiency and stock price. But the human, that's you, pulls the trigger to ensure the robot isn't just hallucinating. Think of it this way. The S&P 500 is your vehicle. It gets you to retirement safely. But AI is the GPS that finds the shortcuts to get you there faster. You don't let the GPS drive the car, but you'd be foolish to drive without it. The era of blind investing is over, but the era of lazy investing is also dead. The AI is a tool, not a savior. If you found this video helpful, make sure to subscribe, hit the like button, and don't forget to turn on the bell so you never miss a new video from Money, Automation, and Growth Hub. Your automated wealth journey starts now.